Kia ora everybody, and welcome to this quick market update for industrial recruitment, brought to you by Agogi and Cohide. And really just in this update, I'm going to look at the minimum wage and the impact that's going to have on the industrial sector, and also look at what we think the trend is going to be in terms of the labour market over the next 6 to 12 months or so. In terms of minimum wage, you're obviously aware that there's a 6% increase coming from the 1st of April, which is taking it to $21.20. In line with that, the other kind of indexes that we look at is that inflation is sitting at just on 6% as well. Unemployment is at a record low of 3.2%. So we are recommending to companies that basically your industrial wages should go up by 5 to 7% in the next little while. And that's really for any kind of roles under sort of $27, $28 an hour needs to be going up. If you don't do that, you're effectively not keeping track with inflation, which is effectively making the earning power significantly less. But more than that, ultimately, that we do know from our data shows that people will leave for higher pay rates, and when they're seeing people around them on minimum wage come up underneath them and their rates aren't moving to the same degree, then they will start looking elsewhere, and you're going to end up having to replace at a higher rate anyway. In terms of the living wage, which is another index that we look at, that was $22.75 or is currently $22.75 from the 1st of September last year. We're picking that will be up above $24 an hour, just in line with that 6% inflation and 6% minimum wage growth. In terms of where we think the labour market is going, particularly in industrial recruitment, over the next sort of 6 to 12 months. Certainly March through to May is going to be insane just with Omicron. We're seeing it a lot already in terms of managing a lot of cases and household contacts, as I know that you will be. And so that's going to make it very, very hard to recruit. Unemployment will stay really low over that period of time. As we look through to June, through to August, we think there'll be a bit of an easing, which is kind of traditional in the winter months, but also as the borders start to open, we get more people coming back in easily, that will actually cause unemployment to increase slightly, but not significantly, and make it a little bit easier to recruit. And then finally, when we get back into the busy season from September through to December, January, then recruitment again will be hard. We won't have kind of gotten enough people inbound to yet offset that. Over the last 2 years, pre-COVID actually we were pre-COVID there was a net migration of about 90,000 people per year. So 2 years short of that, and we're like 180,000 people immigrating into New Zealand short, which has had a significant impact on us and this industry, and then particularly into industries like agriculture, etc., where they've kind of had to try and absorb labours from within New Zealand. We are short on supply, and it's very high demand at the moment, and so it's a job seekers market, and they will move for money. I think the big thing that I would just say that in terms of if there is a silver lining is that underutilisation rate remains stubbornly high. So that's people that are in the workforce that aren't working full-time and are looking for more work. So there is about 277,000 people that fit in that category, which is a lot of people, and it offers a lot of opportunity for those companies that are prepared to change their model, to move away from just full-time roles to having one or two part-timers covering the same roles, to looking at bringing people into their shift for 3 or 4 hours instead of for a full 12-hour shift. Any people is better than no people. What I'm getting a lot is from significant senior managers and that sort of stuff. They're agreeing with it. It's a lot harder to get the team leaders on the ground to kind of buy into that, and so there is a little bit of work needed in that, but there is opportunity to bring people in for those part-time roles overall. Finally, just 3 key takeaways. Obviously, the first one is make sure you keep your people, whether that's payroll or whatever it might be. But just keeping your people is insanely important at the moment because it costs a lot to replace them. And so do be looking at those pay rates and those sorts of things. Hire quickly, particularly if an agency is coming to you with people. Generally, if you're not like making a decision on those people within 24 to 48 hours, those people will be gone in this industry at the moment. And so just make sure that your hiring processes and your hiring managers are set up to kind of handle things within 24 to 48 hours. And the last one is just be flexible. Be flexible for the staff that you've got because you want to try and keep them, but also be flexible in the way that you're approaching your work and looking at opportunities. As always, if you want to, you can reach out to me at andrew@agogi.nz. I can send you a picture of a copy of this deck, or you can give me a buzz on 029 226 3739. Thanks heaps, and ka kite.